Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. In this video we will be evaluating the portfolio performance and looking at changes I made to the portfolio. So be sure to watch through the end of the video. Before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, cue the logo. Let's start off with the market's performance. For the month of September, the S&P 500 returned 4.2%. The market again hit all-time highs after Jerome Powell and team cut interest rates by 50 basis points. Here we can see that the S&P 500 had an overall good month, though this map is off by a couple of days. Big tech companies like Nvidia, Alphabet, and Meta performed very well, while Microsoft, Apple, and Amazon gained more modestly. Over in our corner of the market, non-alcoholic beverage, farm products, alcoholic beverage, confectionery, and consumer packaged food companies all took a hit, while restaurant companies saw a boost. There were a couple of notable earnings reports in September. General Mills beat on earnings per share, achieving $1.07 versus expectations of $1.06, and revenue, achieving $4.85 billion versus expectations of $4.8 billion. This was a 1% surprise to the upside. Darden restaurants missed the mark on both earnings per share, achieving $1.75 versus expectations of $1.83, a 4% surprise to the downside, and revenue, achieving $2.76 billion versus expectations of $2.8 billion, a 1% surprise to the downside. Clearly consumers are pulling back on discretionary spending and opting to eat at home more. Okay, let's move on to the portfolio performance. I deposited another $100 into the account on the 1st of September, 2024, and at the end of the month the portfolio balance was $305.12. That's a return of about 1.7% for September. While the S&P 500's 4.2% return outperformed my portfolio, I'm still pleased with the gains. Since inception, my portfolio has a 1.4% money-weighted return and a 1.7% time-weighted return, compared to the S&P 500's 5.2% over the same period. I've underperformed. This is primarily due to my conservative investment strategy. It is really difficult to keep up with the massive gains of some of tech's biggest companies. I have also come to see this portfolio as being very conservative, which is why we typically outperform during bad months but fall behind on good months in the market. I think going forward I will try to strategically add more growth stocks to capture more upside. Now let's look at the portfolio moves for the month. First, I bought Celsius and Texas Roadhouse on the 6th of September, and added to the Texas Roadhouse position on the 9th of September and 12th. On the 16th of September, I again added to Celsius and Texas Roadhouse and received a dividend from Hershey. On the 19th, 23rd, and 24th bought more Celsius as the share price continued to fall. I also started adding to my Pepsi position and received my first dividend from Texas Roadhouse. On the 26th of September, 27th, and 30th I continued to pile into Pepsi as there were not many buying opportunities near the end of the month. I also received interest on the cash in the account as well as a dividend from Pepsi. Okay, let's take a look at the portfolio positions. Let's look closer at each holding. Pepsi is now my largest holding, with 0.41 shares at a cost basis of $165.72. This position is up 2.6%. Pepsi makes up 24% of the portfolio. Given that the market keeps making new highs, I think Pepsi will provide relative downside protection to my portfolio. Additionally, as mentioned earlier, there were really no deals to be had in the market, but I felt compelled to put cash to work in a low volatility stock. Chipotle is now my number 2 holding, with 1.1 shares at a cost basis of $49.67. This position is up 16%. Chipotle makes up 20.8% of the portfolio. While I am still very bullish on the company, I have not added to the position since buying the dip last month. Celsius is my third largest holding, with 1.81 shares at a cost basis of $41.31. This position is down 24.1%. Celsius makes up 18.6% of the portfolio. Again, the fundamentals of the company have not changed and I believe it was overvalued before. Still, I am trying to average down where I can, but it is painful. I definitely opened this position too high and too big. Next, Texas Roadhouse, with 0.24 shares at a cost basis of $165.72. This position is up 6.6%. Texas Roadhouse makes up 13.7% of the portfolio. I have managed to lower my cost basis and add to my position in the great company. When researching this company, I found Texas Roadhouse to be the best for my portfolio in terms of optimizing for risk-adjusted returns. So far this thesis has held up and I will continue add to the position opportunistically. Now, we have Kura Sushi, with 0.19 shares at a cost basis of $52.09. This position is up a whopping 54.7% and is clearly my best performing position. Kura Sushi makes up 5% of the portfolio. Obviously I regret not putting more into this position, but it is a very volatile stock and I had a good entry. Still, the more disciplined approach would have been to add more on a good entry, and I will keep this in mind for the next opportunity. Here we have Starbucks, with 0.13 shares at a cost basis of $75.07. This position is up 29.9%. Starbucks makes up 4.3% of the portfolio. I was actually looking to add more before the brown nickel announcement, but for now I am content holding here and would add more if it fell. Next, my only food holding, Hershey, with 0.05 shares at a cost basis of $182.22. This position is up 5.2%. Hershey makes up 3.4% of the portfolio. Hershey is projected to be a very slow-growing stock and is actually way overvalued based on its PEG ratio of 11. I do think earnings expectations will be revised upwards in the coming quarters, but for now I will just hold here. Now we have our last stock position, Dutch Brothers, with 0.18 shares at a cost basis of $27.98. This position is up 14.5%. Dutch Bros makes up 1.9% of the portfolio. I like Dutch Bros, but again, as this is a growth company that is very volatile, if a good opportunity arises I would probably consider adding to it. Last, I have about 9.3% in cash that we will carry over to next month, up from the 8.2% I carried over last month. As far as the metrics for the portfolio, weighted average gross margin and net debt to EBITDA are the same, while revenue per share growth, free cash flow per share growth, and return on invested capital are all worse now when compared to last month. The cash conversion cycle and earnings yield on cost are actually better this month. Overall, I think I'd like to add more growth the portfolio, which means I will sacrifice earnings yield on cost for the time being. Well, that's it for this month. Many thanks for watching. What do you think about the portfolio? Are there any stocks in my portfolio that you would add or sell? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.